Thank you very much to Tommaso Tassi, head of the Italy Distribution, Aberdeen Standard Investment, and Donald Amstad, Chief Operating Officer, APAC Distribution, and Head of Investments, Aberdeen Standard Investments. And so the first question is for Tommaso, just to start our conversation in Italian, and is about why China and why China with Aberdeen Standard Investments. What can you tell us about it? And just a greeting for our audience. Possiamo passare in italiano, dopo con Donald torniamo a parlare nello specifico.
Grazie Davide, grazie a Fans People per l'opportunità. Ringrazio anche il collega Donald Amstad che gentilmente si è collegato al nostro ufficio di Singapore. Per chi si è collegato magari 2 minuti prima ha avuto modo di vedere il nostro ufficio. L'apertura risale al 1992 per darti un po' un'idea a te e un po' anche a tutti quelli che ci stanno seguendo. A quel tempo l'ufficio venne aperto da Yu Yang, che è uno dei nostri leggendari gestori sulla componente azionaria. A quel tempo erano solamente in 2 quando hanno aperto l'ufficio nel 92, ad oggi sono circa 580 le persone che abbiamo sul campo in Asia, dislocate in 10 uffici che ovviamente si sono aggiunti a quello di Singapore. Questo per dare un po' un'idea di come Aberdeen Standard Investments ha a cuore tutta la parte del mercato asiatico. E in particolar modo, come poi Don ci guiderà, riteniamo che sia particolarmente interessante ad oggi non soltanto l'Asia in generale, ma anche la Cina in particolare. Quello che abbiamo visto con la crisi, con il coronavirus, è una situazione di incertezza generalizzata. Quello che ci troviamo noi come investitori fondamentali, quindi gestori bottom-up, tipici bottom-up, che quindi fanno l'analisi sul campo, quello che vediamo con particolar modo positivamente in Asia e in particolar modo sulla Cina è una visibilità maggiore su quelli che sono gli andamenti delle società e gli impatti che il virus ha generato su queste società, non soltanto in termini di conto economico, ma soprattutto quelli in termini di stato patrimoniale. Quindi in questo momento riteniamo che l'Asia, in particolare la Cina, siano quella parte dei mercati emergenti particolarmente interessanti. Un po' perché sono le aree che stanno ancora crescendo, che comunque crescono anche in base alle stime del Fondo Monetario Internazionale, e un po' perché riteniamo che ci sia una buona visibilità su quelli che sono, come dicevo precedentemente, gli utili che faranno queste società. Abbiamo un po' la capacità di valutare in maniera corretta quelli che sono lo stato di salute. Ne parlerà poi Donald e quindi magari poi passo la parola direttamente a lui. Anche a partire da quest'anno c'è stata una svolta epocale in Aberdeen Standard Investments, perlomeno per quanto riguarda i fondi regionali e i fondi globali che investono sulla parte dei mercati emergenti. Se fino all'anno scorso eravamo in sottopeso sulla Cina, a partire da quest'anno abbiamo cambiato il nostro punto di vista e siamo andati in sovrappeso. E questo in virtù non soltanto di quello che ha dimostrato la Cina come mercato recentemente, ma è frutto di tutta una serie di sviluppi avvenuti soprattutto in termini di corporate governance, che riteniamo sia più tutelante per noi come azionisti di minoranza, e vediamo che ci sono stati molti sviluppi da questo punto di vista. Quindi riteniamo che sia non soltanto per le prospettive, ma anche per la tutela degli investitori, un mercato particolarmente interessante. Magari per spiegare i motivi per cui siamo andati in sovrappeso lascio la parola a Don, che è sicuramente più tutelato di me.
Assolutamente. Poi Tommaso, se vuoi intervenire in qualsiasi momento, certo, con domande o con precisazioni, poi magari alla fine della nostra discussione torniamo anche un po' più sul mercato italiano per capire da te com'è la percezione sulla regione e sull'opportunità cinese. Però switchiamo in questo momento in inglese, così andiamo subito nei dettagli con Donald. So, Donald, thank you very much again, because this is a great chance for us to have a direct news and insights about China and about the Asia, all the Asia region. So economic growth is now extremely related to COVID-19 and in particular to lockdown measures. So what is going on in China when the outbreak started and in all the region? Which is the current situation and how do you evaluate it? So as to start with something more broader than just investments.
Well, first of all, thank you, Davide, for having us on today's event with Funds People, and to my colleagues in Milan, Tommaso, thank you, and Juliana, thank you so much for having me, and to all the viewers today. Buongiorno, and I hope that you and your families, your friends, your colleagues are safe and well. In terms of what is happening out here on the ground, is that China, we say, was FIFO. It was first in and first out of the virus. And I think what is interesting is the response of the virus by the Chinese authorities is almost the complete opposite of the response, for example, in the United States or the United Kingdom. In the United States and the United Kingdom, the central banks have responded with very aggressive monetary policy. The Treasury departments have responded with massive fiscal spending of the order of 10% of GDP, and just blowing any sort of sense of a reasonable GDP fiscal deficit out of the water. But with I would say, a rather timid political response, rather reluctant and rather slow to shut down. The response in China, I think one can legitimately criticize the Communist Party for an initially slow response, but once they understood what was going on, they acted in a very draconian way by shutting down this city of Wuhan and the province of Hubei that it's located in. And they did this at Chinese New Year. And Chinese New Year to Chinese is like Christmas to Italians or Thanksgiving to Americans. It's a time when everyone goes back to the family, and particularly migrant workers go back in the countryside. And people got locked down and trapped, and had to deal with it. And obviously, it was almost 80 days that they were shut down. And I mean, thanks to that draconian political response, the view in China is, I mean, if you come from Wuhan, you're feeling very battered and very bruised, that you've not been treated very well, because obviously a lot of people have died, and for certainly more than the 3,000 or 4,000 numbers that come up in the official Chinese statistics. But if you live anywhere else in China, you feel that the Communist Party have done a very good job, because if you live in Beijing, or if you live in Shanghai, or Shenzhen, or Guangzhou, or Chongqing, which are these mega cities in China with upwards of 20 million people each, you've basically been saved. Of course there were some cases, but the lockdown of Wuhan in particular was so airtight and so complete that they basically managed to isolate the virus there and save the rest of the country. And just very crudely, there are 1.3 billion people in China. So 10 million people in Wuhan suffered, 1.29 billion people didn't suffer. I mean, the mathematics looks very good. And of course, because the shutdown was so intense, of course, the economic slowdown was very rapid. The economy has fallen off a cliff. But it's interesting that the data that's coming out of China now, there is some extraordinary data. Not all of it is good. But if I take one piece of data from last week, Volkswagen, the German car maker, their car sales last month in April 2020 were down just 2% on April 2019. Now that's extraordinary. Now, I don't want to pretend that China is doing a V-shaped recovery. Yes. I think it's more like a Nike tick, sharply down and then gently up. But the first quarter in China is always very slow because of Chinese New Year. And actually the economy in Q1 is normally V-shaped, sharply down for Chinese New Year, then straight back up again. So we had the normal Chinese New Year straight down, and it's getting back more slowly. Another interesting story is domestic tourism. We've just last week, China was on holiday for Golden Week. And of course, people can't fly internationally anywhere because there's so few countries that have open airports. So international tourism has collapsed. But domestic tourism is remarkably strong. Now, admittedly, people would rather drive somewhere rather than take a train, and they'd rather take a train than take a plane. I mean, the idea of sitting in a tin can at 36,000 feet, for 2 or 3 hours with goodness knows however many people it is not particularly pleasant. But the tourism numbers last week were strong. Just this week, Disneyland, they have a site in Shanghai, and that has reopened. Now, they have social distancing there, and they're only selling 1/3 of the number of normal tickets, but the 1/3 or the 2/3 reduction, the 33% of tickets that are on sale immediately sold out, and families going there. So
Donald, what does tell us about also to go more in details in investments, because we can see a big difference, and you said in United States, UK, and in China, and also Europe in general. I mean, like so many doubts about what to do about the lockdown for the economic consequences, and on the other end, China that immediately decided to do it. This tells us also something different in the approach to the future, so as to feel or not to feel so strong and to have big problems because having like a slowdown of the economy because of the lockdown, but China decided immediately. And I think what we learned also from this situation, looking at the world in general, and the economic growth and all these things that can tell us something about how to invest, and why do you decided to take a so strong position about China as the new safe haven?
Yes. The most interesting comment that I've heard is from Devon Kalu, who is our global head of equities. And he was saying recently that as an equity investor, he has greater certainty about the earnings outlook in 2020 for companies in China than in any other country in the world, which I find extraordinary and also slightly ironic, because of course, China is known to be opaque and not to be transparent. But I think because of this incredible political reaction that China had, they are able to restart and to reopen the economy, and that gives us much greater certainty for the earnings outlook for Chinese companies. Now, it's not, the earnings are not going to be as strong as 2019, clearly, but it does allow us to have this path to see the way ahead more clearly in China than in the United States or in Europe or indeed anywhere else. And what this has led to in the way we construct portfolios is that if you take the Aberdeen Standard flagship Asia Pacific or emerging market equity portfolios, we are overweight China for the very first time. Now, I mean, I know, Tommaso, you've been at Aberdeen Standard quite a few years now, but I've been at the company 13 years in Singapore, and I was almost brought up with this idea that Aberdeen Standard was skeptical, cautious, cynical, not trusting of China, and always underweight China to a very huge extent in our flagship portfolios. maybe overweight Singapore or overweight Hong Kong, or other parts of the world that had I don't know, better standards of governance and ESG, for example. Now, this change in the portfolios is not something that happened because of COVID-19. It's a process that's been underway for a couple of years. And I think it is also to do with other very important trends that are happening in China. And obviously, one of those is the opening up of capital markets. One of those is the improving standards of corporate governance. And I think for us as investors, I mean, it's interesting, just as Tommaso and his colleagues in business development are trying to build relationships with the investment community in Italy, so our investment team in China is trying to build relationships with Chinese companies, because we feel that if we get to know these companies better, then we can get to trust, and then we can make better investment decisions. And we take this engagist approach. You know, we want to engage with companies, and I don't want to pretend that the level of corporate governance in China is now up to a Hong Kong or a Singapore standard, which are the two countries that are best in class in the region. But the key change is this movement of direction, and what is key to that is the willingness of companies in China now to engage with us in ways that they've never been willing to engage before. You know, many Chinese companies now understand the importance of good governance, and how if you have a company that is perceived by investors to have good governance, then the market will reward that company with a higher PE ratio. And that is one way to get the share price up. And it really is this sea change. You know, we've been knocking on doors of companies for decades in China. We first started going there in 1992. Yeah, when we first started going there, you know, we would knock on the door, and you know, they wouldn't even open the door. You know, they'd never heard of us. And frankly, they didn't care. But it's really encouraging now that, you know, when we knock on the door, we say we're from Aberdeen Standard. I mean, we're almost welcomed with open arms. You know, yes, let's come in and talk. So that's very encouraging. And then I would say that where COVID-19 comes in, you know, to answer your question, David, is that, you know, COVID-19 just gives us this extra level of confidence that actually the political system in China is very, very strong and is very resilient. Obviously, you know, in America, the political cycle is 2 years, and we have this election coming up in November for the presidency. In China, it's a 10-year plus cycle. But then I think there's also the point about the resilience of the financial system in China, because if you think, I mean, China still has a relatively sort of communistic or socialistic financial system in that the role of state-owned enterprises, and particularly state-owned banks, is very important. So it's relatively easy for the government to turn lending taps on and off. And if I compare that with the capital markets in the United States, you know, where, I mean, you know, banks, for example, originate mortgages, loans to companies, student loans, car loans, whatever it is, and then they immediately get them off their balance sheet and sell them to an investment bank to structure into a CMBS or an MBS or an ABS, and then there are investment specialists who take pools of MBS and ABS and CMBS and parcel it up into LBOs and CDOs and CDO squareds, so that, you know, if you get a breakdown in the financial system in the US, like if people stop paying their credit card bills, or people stop paying rent on houses, or companies like a restaurant stop paying rent to the bank, from whom they've taken out a commercial mortgage. I mean, you immediately get this incredibly complicated, chaotic response.
Yes, domino.
Yeah, it is like a series of dominoes, and of course that's why you had this incredible crash in the stock market between the 19th of February and the 22nd of March in the United States. I mean, the S&P index down 33%. It was, and of course, it was a crash that happened because the United States, in particular, is so highly leveraged. Everyone is leveraged up to the eyeballs. And in China, in comparison, the financial system is much more simplistic. It doesn't have that level of sophistication. So it's much easier, therefore, for the government in China to control and actually leverage in China, I mean, grew very heavily after the global financial crisis. And it's very interesting that it hasn't happened this time. So, when we think about the response to COVID-19, very heavy on the politics, very light on fiscal and monetary policy. Of course, it's supportive, but it also means that if we do get a second wave in China, the Communist Party still have a lot of ammunition to use to try and support the economy. So that is very supportive. And really, because the transmission system in China is relatively unsophisticated, that is a good thing in times like this. And I think the other factor that is interesting to us is that if you think about the crash that we had in that sort of 1 month period, it was like a global margin call. There are so many investors around the world trading markets using leverage. I mean, hedge funds, obviously, the prime example. And when asset values, the price of risk assets fall, they have to sell. Now, very few people had anything in China to sell. Most hedge funds don't play in the Chinese bond market. Most hedge funds don't play in the Chinese stock market. So, China has been, and China's weight in global indices is pathetically small. It's 1 or 2% of a bond index and maybe 3 or 4% of an equity index in terms of onshore securities. So again, in terms of looking for places to hide in a storm, you want to try and find asset classes that are globally unowned, and China A shares, China onshore bonds, both tick that box with a very, very large tick. If you think about the performance of A shares, it's been incredibly resilient. I mean, NASDAQ aside, it is the best performing stock market this year. The Chinese onshore bond market is one of the best performing bond markets this year. And the Chinese currency is one of the strongest in the world. It's only gone down by 1.5% this year against the US dollar. The euro's gone down 3.5%. Sterling has gone down 6%. Aussie dollar's gone down by 8%. Canadian dollar's gone down by 10%. And then you get into Brazil and Mexico and Russia and Turkey and South Africa, which are down 20-25% still. So this is why I think it is interesting that people are starting to talk now about China as a safe haven.
Yes, and so let's go back to companies, so as to understand which are the sectors and the specific features you look at now in the Chinese equity market, but also bond market. I mean, which is the current situation, the features of the Chinese companies and why they are interesting, and what you are looking at when you select a stock or a bond.
Sure. The first issue on an equity is governance and the willingness or not of a company to engage with us. And as I mentioned earlier, I wouldn't say that all our companies have great standards of governance today, but what we are confident is that they are moving forwards in the right direction. The second point to make is that I think there is one big storm cloud brewing up for China, and that is the trade war with the United States. And clearly, to the extent that President Trump is not doing so well in the opinion polls in the United States ahead of the presidential election on the 3rd of November, then of course he is going to need, and to the extent that if he is doing poorly, and people say that's because of the high death rate in the United States because of COVID-19, then of course he is going to want to blame someone. It's easier to blame a foreigner, and it's going to be easier to blame China. I think that'll be a popular strategy, and I'm sure the Democrats will use it as well. And the US presidential election could easily become who wants to hit China the hardest, who's got the biggest hammer to hit China with. So when we think about that risk from a portfolio construction point of view, clearly we don't want to be in any sector that is exposed to exports, and particularly in terms of exports to the United States. So if you take the Aberdeen Standard China A-Share Fund, just 5% of the earnings of the fund come from companies that are exposed to the export sector. So we're very much focused on the domestic economy, and I think there are 4 themes that we would like to play. The first is higher end food and beverages, this premiumization of consumption. If you look at the structure of China by wealth level, the numbers of people over the last 10 years who have moved out of poverty into some sort of middle class lifestyle is in the hundreds of millions. I mean, the numbers are just absolutely staggering. And then there are also the people who are moving out of middle class into some sort of more luxurious lifestyle, becoming part of the global elite. And the numbers here are still in the tens of millions of people. And of course, as people become wealthier, their disposable income is rising, and disposable income in China is still rising. And so the premiumization of consumption, particularly for food and beverages, is one big theme in the fund. So there's a company called Mao-Tai that makes this fire water liquor. I don't know, Davide, did you ever try it?
No. I never been in China. I know the company. I know the company because of the portfolio managers first. And,
okay. Tommaso, did you try?
No, not Don. But this is one thing that I want to do. Let's say after it's possible to go out and buy something.
Okay. Well, next time I come to Milan, I'll bring.
You bring with you
lots of miniature bottles of Mao-Tai. One for you, Tommaso, one for you, Davide, and Tommaso, I promise to bring for our clients. Personally, I think it's absolutely revolting. I don't understand. I don't understand it. It's not my taste, but it's just as people want to have Dom Perignon or Krug champagne at a wedding in Europe, this is the must-have bottle of liquor to have at your wedding, your business party, your business dinner, whatever it is. So this is a company that has margins of 90%, 90. and it's trading on a PE of barely 20 times. I mean, it's becoming, you know, a national champion in China, and it's very interesting in China because, of course, all these companies, they're not all headquartered in Beijing. Some of them are headquartered in Shanghai, some of them are headquartered in Guangzhou, some of them will be headquartered in Shenzhen, some of them in Chongqing. I mean, they're all over the country. And what's interesting is that these companies are typically big in Shanghai, or they're big in Beijing. And the opportunity for them is just to become national champions, national brands. And that's what we're after, and that's what we get with a company like Kweichow Moutai, high-end food and beverages. Another sector we like is healthcare and wellness. I mean, we liked that before COVID-19, and we think that COVID-19 is just going to accelerate that trend. Yeah, of course, people want good healthcare and good medicine, and yeah, it's one of the benefits of having a higher income, that you can provide a better level of healthcare for your family. So a company like Eye Hospital is a classic example here. Life assurance is something that I'm sure everyone in Italy understands. Life assurance is a very interesting industry in Asia. You know, these insurance companies are absolute giants, and when people move out of the countryside and into a city for the first time, and they get a job in a new factory, they'll do a couple of things. Of course, they'll open up a bank account for the company to pay their salary into. But the other thing that they will do almost straight away is they will buy a life policy on the life of the breadwinner in the family, which is usually the male. And this is so that if there is an accident and if something happens to him or her, then usually the wife will claim the life policy. And that is a nest egg to be spent on children's education. Oh my goodness me, as someone who is married to an Asian, and I live and breathe this Asian tiger parent concept every single day. And I have twin boys who are 11 years old, and it drives them nuts. But there's this Asian desire for education is there, and life policy is automatically taken out by people to provide an education for their children in case something goes wrong. But of course, with this COVID-19 situation, more and more people want life insurance. Ping An is our pick there. It's the biggest Asia company. It has about a 4% index weight and about an 8 or 9% index weight in our portfolio. That's a very interesting company from a governance point of view. Last year, Ping An did their first ever share buyback. And in terms of why they did it, they bought back shares from the market to give to the senior executives of the company to make sure that they were aligned with minority shareholders in the company. And I'm glad to say that Aberdeen Standard was part of that discussion with them. Now, a share buyback is not news in Europe. It's not news in the United States, of course, but it's a great example of what's happening in China. So that's the third sector. And then the fourth sector we call spending switch. This is really, I would say, some soft IT. Of course, I mean, China, I think, has already been very, very well advanced technologically. You think about the use of payment systems like Alipay. You think about chat systems like WeChat, and which is run by Tencent, and what you can do with that. But the COVID-19 situation has just accelerated this movement to go online. So we have companies here that play on cloud computing, cybersecurity, online grocery deliveries, a thermal camera maker, for example. All these companies that are, really the new China, and I think where China goes, the rest of the world will follow.
Yes. We have a question related to this coming from our audience. There is about the expectation of some foreign companies to move back their plans because of the risk of another outbreak of the coronavirus, and how this will impact. But I mean, if you want to stress again the thing, you are really focused on the domestic market, and if you can give us some number so as to tell us how independent is China growth from the world. Maybe is the world that is dependent on from China growth.
Yeah. Well, I think we have one slide. Maybe it's in the slide 9 in the pack, which maybe you just want to put up briefly in response to this question. But of course, pre-COVID, China was accounting for almost 40% of global growth, and was about 20% of global GDP. At the moment, we're expecting that the Chinese economy will probably shrink by about 3% this year. But I think the numbers for the United States are going to be even worse, and may well be in a double-digit number. And in one sense, there's been this race between China and the US, or China's been trying to catch up with the US in terms of size of economy by growing quicker. I think it's going to be ironic if China becomes the biggest economy in the world on a nominal GDP basis, just because the Chinese economy fell less than the US economy fell in 2020. I mean, that's also another way to get to number one. But in terms of exports, exports are now only 20% of GDP in China. Net exports have not been a driver of GDP growth in China for the last 10 years or so. I know this is a card that particularly the Trump administration in the United States want to play. But it's going to be very interesting to see how that plays out politically. Here is this chart that your audience can see. On the left-hand side, that dark blue bar is China's contribution to global GDP growth pre-COVID, so almost 40%. In the pale blue bar, the 20% approximately weight of China's share in GDP on a PPP basis. And then on the grey bar, China's weight in a bond index, and in green, China's weight in a global equity index. And of course, this was the point I was trying to make earlier, that China's weighting in global indices is just so tiny, so that when markets sell off and investors globally need to raise cash, they've got almost nothing in China to sell. And surely the rise of China over the next 40 years will be about the rise of China in global bond and equity indices. And this is one of the reasons why we like the opportunity. If you think about China's weight in the MSCI EM index, China A is only 4. A house like UBS thinks it'll be over 20% by 2024, for example. So, huge potential there, and huge potential for money to go in. But to answer your question about companies reshoring, of course, it is a threat that the Americans could carry out, and they could encourage companies to return to the United States. The question then is, what is the cost, and who benefits? And of course, the reason why no one makes anything anymore in the United States is because the United States is a terrible country to manufacture anything in. I used to go to the United States once or twice a year. I don't know whether I'll go this year or not. But every time I go to the United States, I'm just appalled by the terrible infrastructure in any city in the United States. I feel like I'm in a third world country. I mean, there isn't a nice airport that I know of that you can land in the United States. You know, there are no nice roads to drive along, and there are certainly no nice train journeys. I mean, sometimes I take the train from Philadelphia to New York, and it is literally doing 60 kilometers an hour. Yeah, and it's a journey of 60 miles, and it takes almost 2 hours. I mean, you know, last time I was in China, I took the high-speed train from Beijing to Shanghai, yeah, which is over 1,000 kilometers, and you do it in under 4 hours, and that's including stops, and that's city center to city center. I mean, it's magnificent. So I think it's one thing for the American government to encourage companies to go back, but it's going to be hell for these American companies, because America is such an inefficient place to build anything. And of course, if you're making a car or a widget or whatever it is, you need that infrastructure around you, you know, the infrastructure of all the different part makers, which is going to take years to build up. So costs are going to go up, so prices are going to go up. So who's going to pay? Well, it's going to be the consumer who's going to pay. And my God, I mean, I pity the American consumer. I mean, after last Friday's unemployment report, I mean, you know, 20.5 million Americans lost their jobs in April. I mean, it's a terrible number, and it's likely to get worse. Many of these people just now barely earning any money. And of course, you know, salaries in the United States for most people haven't gone anywhere for the last 20 or 30 years. But at least, thanks to China, even though your nominal income hasn't gone up, your real income has gone up because the price of goods made in China keeps on falling. So, you know, if the American administration want to encourage companies to move back, it's just going to hurt Americans' real living standards and just give them another whack down. The other point, of course, is that China is going to remember which companies stay and which companies leave. And at the end of the day, China is a market of 1.3 billion increasingly wealthy consumers. And yeah, if you are Apple, if you are GM, if you are JP Morgan Chase, you know, how important is your China business? You take GM. In 2018, GM sold 16 million cars in the United States, and everyone thinks that GM is a US car company. They sold 27 million cars in China. Yeah, so there's that reality as well. Yes. So I think there's going to be a lot of bluster going up into the US presidential election in November, particularly if the economic data in the United States continues to be poor, and particularly if President Trump continues to poll badly. And surely many companies might be tempted, but then, yeah, they're going to have to do a cost-benefit analysis. And yes. It's really a sensible strategy to rebase your manufacturing in the United States and export from there to the rest of the world.
Yes.
Maybe.
Yeah.
Please, Tommaso.
Yeah, if I can add one point that, you know, it's relevant also for people that potentially listen to what we are talking about on China. It's regarding our, let's say, investment process that Donald, let's say, briefly touched. You know, it's at the moment, you know, it's and also was an article this morning on FT that there is from Moody's that there is an estimate that there is an increase in terms of default of some companies on emerging market. Our view potentially, and Donna, let me know if you agreed, is that there is a potential increase in difficulties for some companies in emerging markets, but also a lot of companies across also the developed markets. And this is why we are trying to, let's say, build our portfolio, not only in China, but also across the globe, focus on the quality. And I think that at the moment, this is the key parameters that an active manager need to take into consideration, because just focus on quality, and then Don, I think that you can explain a little bit better what is quality for us. I think that we can, let's say, make our portfolio more stable and less at risk, given the current market condition and the increasing in terms of default.
I think it's a very good point, Tommaso. And what's very nice is that we're sitting here in early May, and we can look back at this period of extreme stress in the markets just very, very recently. And you know, what are the lessons that we can learn from that? And one lesson that I think people do need to realize is that, you know, even at you know, some parts of Aberdeen Standard Investments, yeah, people think about the world of investments as a sort of bipolar world. You have DM and you have EM. And I think one lesson from this crisis is that Asia is not EM. And so many people globally just put Asia very lazily into the EM bucket. You know, it's over there, it's the other side of the world, it's strange, it's foreign, they talk different languages. But when we look at the performance of different asset classes, you know, firstly, when you look at Asian currencies against the dollar, Asian currencies as a whole, you know, outperformed developed market currencies against the dollar. You know, there were several, you know, developed market currencies that fell by a double-digit amount in that stress period, you know, like the Aussie dollar, the Canadian dollar. There was only one Asian currency, the Indonesian rupiah, that fell that far. The Taiwan dollar, the Japanese yen, I know that's developed Asia, but the Taiwan dollar, the Hong Kong dollar, the renminbi, I mean, you know, even the Philippine peso, these currencies all held up. When I look at bond markets, local currency bonds in the region did incredibly well. Bond yields came down across the board, unlike in EM, where bond yields went up. And unlike the developed world, the G10 countries, where obviously in Germany, in Switzerland, in France, you know, yields are already so low, and in many cases negative, there's just almost no room for them to go more negative. When it comes to corporate bonds, what is incredibly interesting is that if going into the crisis you had owned a portfolio of US dollar bonds issued by Asian companies, that portfolio would of course have outperformed a portfolio of corporate bonds issued by EM ex-Asian companies, but it would also have massively outperformed a portfolio of bonds issued by United States companies. Incredible, because obviously, as we know, corporate America went into this crisis the most highly leveraged it's ever been. And you know, there are trillions of bonds that were sitting, you know, at BBB on the verge of going over into the high yield space. And these business models that American companies have been running are incredibly dangerous. And I'm very skeptical about the Fed's ability to bail these companies out. I mean, for sure, the Fed can come in and buy corporate bonds and push up the price of a corporate bond and tighten the credit spread, which is what has happened. But the Fed buying bonds doesn't put passengers into airplanes. It doesn't put customers into restaurants. It does nothing for the real economy. Yes. And if I compare that with the behavior of Asian companies, you know, Asian companies have spent the last 5 years deleveraging. You know, they went into this crisis with some of the lowest levels of debt that they've ever had. And you know, when people talk about the corporate bond issuance, of course, some of the numbers are skewed by China, and there has been a big increase in the numbers of Chinese debt outstanding. But then, starting from a very, very low base, many of these issues have been first-time issuers, and these are issuers that are household names in China, issuing dollar bonds. The other point to make about the demand for China, why did Asian dollar bonds hold up so well, is that in Hong Kong there is like a, you know how in weather you talk about microclimates. There is almost like a micro capital market in Hong Kong, which is the center of intermediation between Asian investors who have too many dollars and sit on dollars that they want to invest, and of course where companies come to borrow. So not only does China have $3 trillion worth of foreign exchange reserves, there are hundreds of billions of dollars parked in Hong Kong that are owned by Chinese companies, Chinese families, Chinese individuals. And when they want to invest, of course, they have the preference. If you're an Italian, you're very happy to buy a bond issued by an Italian bank or an Italian company. The Chinese are the same. When they have dollars to invest, they buy bonds issued by names that they are familiar with, that maybe investors in Europe are not so familiar with. But this is an incredibly important driver. And so we saw this massive outperformance of Asian dollar bonds, both versus EM and DM. And I find that very interesting. And then, of course, when it comes to equities, Asian equities as a whole outperformed, and especially China. And China because it's just, and China A shares, just because it's not well owned. And I think it's interesting comparing China with India here.
Yes, and we also, about it, we also have a question specifically about Vietnam. So if you want to cover some other country of the region, so as to tell us something specific about it.
Yeah, and what is the question about Vietnam?
The Vietnam is if there was a talk about the benefiting from a trade war, and it seems also Vietnam to handling the virus extremely well. And so if you think Vietnam can outperform other Asian countries in the short term or medium term.
Yeah, I mean, just if we move the discussion outside of China for a moment, I mean, when this is all over, I sort of feel like this is a little bit like an Olympic Games, yeah? And at some stage we're going to have a medal ceremony, and to see which country gets the gold medal for the best response to the virus. I'm very convinced that my country, the United Kingdom, and particularly England, will be getting what we call the wooden spoon. They will come in last place, like the English soccer team always do. But when it comes to the gold, the silver, the bronze medal, then a number of Asian countries will be up there. Personally, if I take one lesson from this, the winner is Taiwan. I mean, the Taiwanese have done just a superb job. And the other lesson I think that we can all take from this virus is that, of course, everyone is trying to work out what is really happening in China and how do you get information. Well, Taiwan is very interesting because Taiwanese families, Taiwanese companies, Taiwanese businesses have invested hundreds of billions of dollars in China. And even though the relations between the Taiwanese government and the Chinese government are very tense because the newly re-elected lady president is more independently minded and doesn't really think that Taiwan should become once again a province of China. But nevertheless, the business links are incredibly strong. So Taiwanese businessmen have their ears very, very close to the ground. They really know what's going on in China. And so they were the first country to pick up the signals that something was going very, very badly wrong in Wuhan. And they were very quick to get health inspectors onto flights in and out of Wuhan, between Wuhan and Taipei, and then to shut down flights from Wuhan altogether. They were the first to do it. So, obviously, politically, it's very difficult for anyone to give Taiwan a gold medal, because if you give Taiwan a gold medal, then you upset China, and no one wants to upset China. But yeah, that's the political reality. But I think that's where I would give it. But Vietnam is a very interesting contender as well. Again, a huge political reaction and a very, very rapid shutdown. So the Vietnamese have done well. Now, Vietnam was doing well pre-COVID. If you take Samsung Electronics, for example, the massive Korean electronic manufacturing company, their biggest factory outside of Korea is very near Da Nang, which is sort of halfway up the coast of Vietnam between Hanoi and Saigon. And I was at Seoul Airport earlier this year, and my flight back to Singapore was at the gate next to the Korean Air flight to Da Nang. And I was thinking, Seoul, Da Nang must be a little Airbus A320 or maybe a 737. No, it was one of these big, Boeing 777 airliners, and it was just absolutely packed. So clearly Vietnam has put itself up as a candidate. I mean, it has a very good education system there, some very, very brilliant people. The problem with investing in Vietnam is the lack of liquidity and the lack of depth in their stock markets and their bond market, and also problems with governance. When you scratch beneath the surface in Vietnam, it is still a country run brutally by the Communist Party, it's very hard to find high quality companies. Now, in our Asian Smaller Companies Fund, we do have 4 holdings in Vietnam, so there are some. And again, I would say that governance is getting better. And I know that there are some boutique fund managers who have Vietnam funds on the market. I think the better way to play Vietnam, if you want to do that, is through Thailand. Thailand is sort of, or Bangkok is almost like the central hub of this wheel of Indochina. Thai companies like Thai Cement, Siam Cement, Bangkok Bank, all the big companies there, CP Propand, they have very big operations, whether it's in Burma to the west, or to Laos, Cambodia, and Vietnam to the east. Of course, you don't get a pure Vietnam play that way, but that's another way to play it if you can't find the liquidity that you want. I mean, we would find it impossible to build, for example, a dedicated Vietnam portfolio.
Clear. So, Tommaso, a question for you now. It's more about the Italian market. How is the perception about, in general, investing in Asia and in particularly in China, also China A shares? I mean, all the things Donald said, all the evidence is how they are perceived in Italy. It's we are at a good point, not a so good point. What are you doing so as to make it clear for Italian investors?
What, in Italian or in English, Davide?
Please talk in it, please.
If you don't mind, Donald.
of course.
Sorry Don, sorry for that. Davide, allora il discorso è che quello che è emerso oggi, secondo me, da alcuni punti di Don è che la Cina è un mercato troppo grande per essere ignorato. E soprattutto quello che abbiamo parlato anche di Don, soprattutto la slide che faceva vedere un po' il peso per quanto riguarda il GDP e soprattutto invece anche il peso della Cina all'interno degli indici mondiali, sembra una situazione un po' paradossale. E quindi comunque siamo in una situazione in cui il mercato cinese ancora dato prova quest'anno, soprattutto dopo la crisi del coronavirus, della sua forza. E quindi mi verrebbe da pensare che non è una rivoluzione, quindi il prendere, diciamo, inserire la Cina all'interno di un portafoglio con pesi più significativi, ma mi sembra che sia un'evoluzione necessaria e comunque un'evoluzione che a questo punto è inarrestabile. Il punto che diceva Donna anche precedentemente, che è molto interessante, il fatto che in una situazione in cui l'America cresce e la Cina cresce con dei tassi più elevati, prima o poi sarebbero arrivati a un punto, diciamo, di contatto. La situazione in cui l'America scende in maniera più marcata e la Cina tendenzialmente risulta essere più stabile può accelerare questa situazione. Quindi mi sembra che ci sia sul mercato italiano molto interesse per il mercato cinese. Secondo me ancora però non è chiaro quanto è forte il mercato cinese e soprattutto, un po' riallacciandomi a quello che è il titolo di questo intervento, quanto il mercato cinese può essere, diciamo, non considerato proprio come un mercato emergente, ma quanto proprio come un mercato invece che è diverso rispetto agli altri e che può aiutare la stabilizzazione anche dei portafogli. Lo citava precedentemente Don, quanto è stato più stabile la componente azionaria, quanto la componente obbligazionaria e quanto poi alla fine la valuta si è comportata in maniera molto diversa rispetto a tante valute sviluppate. Citava il dollaro, citava nei confronti per esempio l'euro, dove ha avuto una volatilità della metà rispetto a quello che abbiamo visto. Quindi mi sembra che ci sia interesse e ringrazio Accomoda per diciamo, la possibilità di approfondire la tematica. Però, come diciamo sempre noi e come giustamente indicato prima Don, parlare di emergenti in questo momento è un termine, se è stato, diciamo, non corretto fino ad oggi, ora è per quanto anacronistico. Vediamo un mondo degli emergenti spaccato in due aree, dove l'Asia, guidata dalla Cina, riteniamo che abbia una marcia in più in questo momento. E nell'ambito della riallocazione o comunque pianificazione di quelli che sono i portafogli, l'importanza e quello che comunque la forza di questo paese, secondo me, deve essere tenuto conto. Come detto, magari è giusto anche per inciderlo, è giusto come inciso, Davide, è un mercato, soprattutto quello delle azioni A, e quindi quello, diciamo, sul quale riteniamo che ci sia molto interesse in questo momento, cinesi, è un mercato molto inefficiente, dove prendere posizioni su quel mercato attraverso strumenti passivi non dà i frutti e i benefici, ma quello che stiamo vedendo invece è attraverso una gestione attiva e un focus sulla qualità. Ho chiesto prima a Don, per noi qualità è società che hanno business stabili, bilanci forti, che sono ricche di cash all'interno del loro bilancio e quindi permette a questa società di guidare un po', di muoversi in quello che è la turbolenza del mercato. In questo momento gli investitori, secondo me, dovrebbero prendere in considerazione quello che stiamo facendo noi, quindi cercare di capire dove c'è più visibilità, e in questo momento sulla Cina e sugli utili delle società, come dicevo all'inizio, cinesi, c'è molta più visibilità rispetto a quelle che sono le società sui mercati sviluppati, ma non perché sono più opache, ma perché ancora i danni che il coronavirus genererà su questi bilanci ancora non sono ben noti sulle società dei mercati sviluppati.
Chiaramente. E poi, insomma, ricordo anche che cioè, tutte queste considerazioni significa che serve anche esperienza e track record e presenza, e per chi ha visto l'anteprima di questo webinar con una visita del museo di Aberdeen Standard Investments a Singapore, ha visto che cosa significa. So I will thank Tommaso and Donald for being with us, and thank you very much for the insight and direct news from Asia. And Donald, I will remember your promise about the beverage, the premium one from China. So if you come to Milan, please And so thank you, Tommaso. Thank you very much for being with us too in Fans People, and thank you to Donald Amstad. Thank you very much, Donald, and we will see you with other webinars. So thank you again. Bye.
Davide. Thank you, Tommaso. Okay. Arrivederci.
Arrivederci.